What is IRMAA? Stands for Income Related Monthly Adjusted Amount, increases certain Medicare premiums based on income. Basically, if you make too much money 2 years ago, you may pay extra for your Medicare premiums. Higher income beneficiaries may pay increased Part B and Part D premiums beyond the standard rates. It's based on a prior year income, often causing premium increases to appear after income events happen. Discretionary retirement income like IRA withdrawals, capital gains can affect IRMAA, so you've got to do some careful planning. What income does Medicare use? It uses tax return data, specifically modified adjusted gross income, which I will henceforth refer to as MAGI, to determine premiums. Income includes IRA and 401k distributions, wages, interest, dividends, and realized capital gains. Certain financial moves can cause one-time income spikes affecting Medicare premiums later. And as I mentioned before, premium changes reflect income from 2 years prior, making timing critical for planning. Okay, certain life-changing events may allow Medicare to consider current income over prior year data for IRMAA. You need to keep your retirement letters, your income statements, and proof because it's going to be essential for income reconsideration requests. Consult the Social Security Administration / Medicare resources and ask about qualifying events, required forms, and timelines for process. I'm going to talk a little bit about this a little later. Patience and planning. Reconsideration takes time and accurate paperwork. Planning ahead helps avoid income spikes causing IRMAA. So retirees manage assets across taxable, tax-deferred, and tax-free accounts to optimize taxable income annually. Smoothing income by spreading taxable transactions over multiple years avoids income spikes and eases tax burdens. Coordinating capital gains, Roth conversions, and required minimum distributions enhances tax efficiency annually. Tax withholding from distributions helps retirees avoid underpayment penalties and ensures intentional planning. Okay, evaluate if the financial decision will significantly change your MAGI this year as it affects returns and IRMAA, tax returns and IRMAA. Consider if the decision could influence Medicare premiums 2 years later due to the look-back rule, creating a delayed effect. Explore alternatives that spread taxable income over time and avoid income spikes and reduce taxable burden. Always collaborate with your tax professionals and Medicare resources before making major income moves to reduce risk. Okay, so there is a form. It's SSA 44. It's the Medicare Income-Related Monthly Adjustment Amount Life-Changing Event. You file this with Social Security Administration, not Medicare. Reasons to file: marriage, divorce, or annulment, death of a spouse, work stoppage, work reduction, loss of income-producing property, loss and reduction of pension, employer settlement payout. So a few things, I'll talk on a few of these. If you got married, the nice thing is when you get married, it changes your IRMAA brackets by double. You get and household income decreased. Divorce or annulment. If you had a divorce or a marriage annulled resulting in lower income, I've got an important warning about that later on. Death of a spouse. Income dropped after a spouse passes away. You and your spouse retired, stopped working entirely, laid off, retirement, etc. Work reduction. If they did a significant reduction in your work hours or pay, not voluntary income shifting. Loss of income producing property. Now, sometimes people will think, hey, if I sell my house off, that's a loss of an income property. But if you did it voluntarily, then they don't count that. But if it was destroyed in a disaster, hurricane, tornado, whatever, that may qualify. Loss or reduction of pension income. Employer settlement payment. If it's a one-time payment to buy you out of your retirement, that may well be. Okay. So important warnings for the people that are familiar with taxes out there. They know that if you're in the 22% bracket and you go $100 into the 24% tax bracket, that means on that $100 bill and the 24%, you pay $24 instead of 22. Not really a big deal. However, if you breach a threshold by as little as $1, it will cause you to be stuck with a bill for the next year or for at least a year. So keep that in mind. By the way, right now the thresholds for single is 109,000. If you make 109,000 or less 2 years before, then you don't pay the charge. You pay 109,001. You pay this time it's about $95. That's where it starts a month per person on Medicare. And then, and it's double for married. So that's 218,000. You're good. 218,001. You are paying extra. Okay, divorcing couples. I have an accountant friend who said, hey, I've got some clients that are getting a divorce this year. They're considering married filing separately. Is that going to cause problems with the Medicare surcharges? And yes, it is, or it potentially can, because with normal brackets for the Medicare, you go through several brackets. Well, if you're over the bottom bracket and you're married filing separately, you could potentially pay $400 or $500 extra a month. Now, there's a few caveats in there. If you lived apart for the entire year, you may get a break, but if you live together for any part of the year, then somebody's going to get hammered. And age 63 is when you should start paying attention, because when you sign up for Medicare, normally at age 65, IRMAA will look back to what you made when you were 63. And again, as I mentioned before, reconsideration takes time and accurate paperwork. And if you plan ahead, you may be able to avoid the income spikes that causes Aunt Irma to show up on your door demanding payment. So if you are within 5 to 10 years of retirement or already retired, wondering how to take income efficiently, concerned about taxes, Medicare surcharges, or legacy, a retirement tax review can be worthwhile. There's important stages for each stage of life. During your working years, once you graduate, be it from welding school, engineering school, or law school, you're going to need a different plan for each of these stages that's tailored to your individual situation. During your working years, in my opinion, one of the most important questions is, am I saving enough and is it in the right place? When you get in that glide path to retirement, which I've arbitrarily labeled as the last 10 years retirement, will the USS retirement be shipshape on the appointed day? We talk about things like Social Security and pension planning. Once you get into retirement, how do I avoid running out of money before I run out of life? And finally, legacy. Does what I worked hard for get to where I wanted it to after I'm done with retirement? I can be reached at herwirefinancial.com. I do in-person, Zoom, and phone appointments. I am licensed and registered across several states and can easily add states if there is a need. If you'd like to schedule an appointment, click on that Schedule an Appointment button and in the upper right-hand corner of my website. If you want to see more videos like this, go to my website and click on the YouTube channel button. It's that red button between the LinkedIn and Facebook buttons. Please like and subscribe to my YouTube channel. By the way, this video will eventually, after it goes through compliance, show up on my YouTube channel. You can follow me on Facebook, LinkedIn, or Twitter. For those who prefer the good old-fashioned telephone, 518-631-2569. Do not text it. We'll both be sad because I won't get it. And for anybody out there that has questions, they can use either method to contact me. I'm happy to talk to anybody. Opinions voiced in this material are for general information only, not intended to provide specific advice or recommendations for any individual. All performance reference is historical, no guarantee of future results. All indices are unmanaged and may not be invested in directly. All data is believed to be from reliable sources. However, no representation is made as to its completeness or accuracy. None of this is to be construed as tax or legal advice. Consult your advisor prior to taking any action. This information is intended to be educational, not tailored to the investment needs of any specific investor. All investing involves risk, including loss of principal. No strategy assures success or protects against loss. There's no guarantee that a diversified portfolio will enhance overall returns or outperform a diversified portfolio. Diversification does not protect against market risk. And for all my friends out there in the Botsford Buds, shout out to you guys. If you have questions, feel free to contact me. I'm happy to talk to any of you. Have a blessed weekend every day. We'll see you next time.